Hey guys, in this video I want to talk to you in terms of what are Fibs or Fibonacci and basically how you use them in the market. Okay, basically as a starting point, in order to know how to use Fibonacci's, you have to understand in terms of how the market moves. Now basically the market moves in three directions, if I may put it that way. Firstly, we have markets, okay, that are trending. So you have price action, okay, creating initial structure high and outside return, new structure high, outside return, new structure high, and in essence that's a trending market. Next we have price action doing something like this: initial structure high, market creates support, resistance, support, resistance, support, right? That is a consolidation, or the market is range bound, right? And next we have a downtrend where price action creates initial structure low, outside return, initial structure low, new structure low, outside return, new structure lows, right? So basically, in essence, again, we have price action is trending, right? Meaning we're creating new structure highs, the market is in an uptrend, market is consolidating, as well as market is bearish, or we're creating new structure lows, right? Now how does Fibs now come into the picture? Now with Fibonacci, markets do two things, right? Now basically in this example we have an uptrend, a downtrend, and a consolidating market. It means that the market is basically doing two things in essence. Market is expanding, as well as the market is contracting at the same time. So again, expansion means the market is moving higher, is creating new structure highs, or the market is creating new structure lows, right? Contraction, the market is really stuck at a particular range, or it's range bound in a zone. So now where Fibs come into perspective with Fibs, how they work, you have what's known as Fib. For this tool, okay, this is a Fibonacci retracement tool, right? This particular tool right here that I have in front of me, okay, this one here, right? Fibonacci expansion, my apologies. Now Fibonacci expansion basically looks at where price action is expanding, in terms of where the market is most likely to turn, right? Particularly Fibonacci expansion, okay, we use them particularly to look for cipher patterns, right? To look at where the C leg is going to close. But for this particular example, Fibonacci expansion is important. You have your 127, your important ratios, your 1414, as well as your 1.618. The next important Fibonacci is the Fib retracement, okay, particularly this one right here, right? So the important Fibonacci ratios, right, is you have your 382, you have your 50%, you have your 0.618, you have your 0.786, you have your 0.886, and you have your 1.13, right? Now those are the important ratios with Fibs, and basically I want to show you some market examples in terms of how you actually use that, and how I basically use that to identify structure zones, but particularly harmonic patterns. Now going into the CAD, right, it is clear to see right here okay, let me just do this. Okay, so basically right here we have in this zone price action consolidating, right? Consolidation meaning that price action is stuck at a particular zone. So these lines particularly show that we are not creating new structure highs or new structure lows. Market is range bound. Now, how do we use Fibs in terms of to incorporate that into our trading? Now, when you look at this, okay, you see that it's junk in essence. I would put it that way. It's junk, and there isn't really a clear direction in terms of where the market is moving or where it is going. So where Fibonacci comes into play is where harmonic patterns, okay, are become evident. Now, if I take a particular zone right here, we have a potential bad pattern. Now, remember, this tool that I'm using is a Fibonacci retracement, right? So if I take my swing low to my swing high right here, okay, let me zoom this in. All right. From my swing low, which is my starting point, to my swing high, right? And then if I took the triangle, so from here, swing low to swing high, come back. So we have price action, right? Retracing, okay, from this swing low to that swing high, price action retraced and retraced to the 382 50% zone, tested the 50% zone, so it retraced to that zone, right? Next, if I were to take from, so it's X to A, A to B, B to C, and then CD completion, okay, CD completion to my 886, so it's exactly at that zone right there, right? So this being a bad pattern, so understanding how to use Fibonacci's, it's important because it gives us the ability to now know how to use them in harmonic patterns, because the key ingredient to understanding harmonic patterns is to know ratios, Fib ratios, and which ratios are important, right? So that is a bad pattern, right? Next, I want to show an example of how we use Fibonacci expansion, right? So let's change our tool to Fibonacci extension or Fibonacci expansion, right? So Fibonacci extension, we're basically looking in terms of where the market is extending or where it's going, where it's most likely to turn. Generally, you're looking at that where the market is trending, or you're looking at what's known as an ABCD pattern, right? So if I were to take my tool from my initial structure low, right, which is then my X to A, A to B, bring this tool back down, boom, right? So the 127, okay, being the zone that is important, okay, and the 1414 as well as the 1.618. Now this is how a cipher pattern, okay, is formed. You're looking at in terms of, let's take my tool, so X to A, A to B, right there. So for this cipher pattern to be valid, I need to test it using my Fibonacci retracement. I need to get a 382, right? Right. So we have price action testing the 382 level, right? Even though this is not a perfect cipher, okay, this is how it would go, right? So you're looking at price action testing the 127 as well as the 1414, but making sure that price action does not break and close above the 1414. So with that tool in mind, the Fibonacci extension, we're looking in terms of where price action is extending. So we said X to A, A to B, B to C, my leg right there, and then we're gonna come back down to a 786. Now for me to get the 786, I need to take my Fibonacci retracement tool from my X leg way up to my C leg and see where the 786, okay, potential reversal zone is, and so it ends at that. So now looking at this, you're looking at a combination of using the Fibonacci extension as well as the Fibonacci retracements. Okay, so it is clear and evident now, right before your eyes, okay, that we had price action turning at the 127. It tested the 0.886, okay, and then price action continued higher. So now with knowing how to use Fibonacci's, you know how to use and transform in terms of understanding harmonics and how to trade them. Alright, so the 786 was a ratio to look out for the cipher, because that is the turning point or the potential reversal zone. So what happened was price action continued to the upside. So it gives you a measuring tool in terms of how to identify patterns. Okay, so basically this shows you how to use these tools when the market is in consolidation, as well as if you are an ABCD pattern type trader, where an ABCD is this, right? So you have initial structure high, outside return, and then you have a new structure high. So this symbolizing an ABCD pattern. So it's A, B, C, D, point completion. It's where we say price action is most likely to turn to the downside. So if you are using your Fibonacci extension, okay, the turning point becomes the 127, right? So swing low, swing high, come back down. So if I am looking for a turning point, I'm looking at price action turning at that 127, okay, for an ABCD pattern completion if you are using that tool, right? So in essence, we use that when the market is trending and we're looking for zones where price action is most likely to turn. I hope basically this video was informative to you and it answers your questions as well, even though I went into harmonics in terms of showing you some examples, but I'm sure it has brought some light. Feel free to ask any other questions which relate to trading, and yeah, happy trading.